The chance to shape your future is here. Learn and connect with exciting new opportunities. Are you ready for the next step?
Hi, everybody. I'm here to present the next session, which is about private equity funding. So if you bear with me, I shall share my screen and we can kick off. Okay. I hope that everybody can see the presentation. As I said, my name is Raz Nazir. I'm one of the founders here at Concilium, and I will be running through the next session, which is all about private equity funding. And what we've done is broken up the presentation into kind of two parts. The first part is about us as a company, what we do, what we're about. And then we walk into the second half, which is more detailed run through of what private equity funding is and how we should go about it. So without further ado, Concilium is a corporate finance practice. We are based in Cardiff, and we set up back in 2014. It was formed by myself and my co-founder, a gentleman called Guy Rainish. And we came together at a time back in 2014 where we realized that there was only a handful of players in the South Wales sort of region who were focusing on equity, bar 2-3 practices. You'd have to go to Bristol or further afield to get that expertise, advice on how to raise money, especially equity investments for companies that were startups or that were looking to grow. And with my background in banking and Guy's background in accounting and consultancy, we managed to put together a very strong network of, I would say, over 100 equity houses and other investor groups who we know quite well. We know the kind of investments they look for. What are they looking for when they look at a good opportunity? And it then gives us that know-how when we're speaking to then the entrepreneurs, the SMEs, the businesses in the local and regional community of how to get themselves ready for investment, and then where to find that investment. And our motto is that once we kind of work together, we ensure that your next sort of move is a real game changer for you, and that's something we take our pride in. So as I said, that we've been around for now almost, we're in our 8th year, and we're a corporate finance practice. And we've worked with both the startup community, established businesses that are looking to grow, and growth can be in many ways. It could be through organic growth, it could be through acquiring equity investments, it could be by acquiring competitors. So there's a number of ways through which you can go about your journey, and we cover the whole kind of the whole the width of the spectrum here. So we do business advisory, equity funding, we do a bit of property funding. We're also a authorized endorsing body by the UK Home Office, and that's all to do with foreign investors, where you've got foreign entrepreneurs looking to relocate to the UK, but bringing investment with them. And there's a particular investment scheme that the government has set up. It's called the Tier 1 Innovator Program. And as an endorsing body, our job is to validate and vet that business idea proposal before they can get their visa and arrive in the UK. But that's a very fairly recent development. But for the majority of the 7+ years, we've been involved in what I call the bread and butter, which is business advisory, getting clients investor ready, and then going to the market and raising funding for them. Alongside that, that could be also things like transfer of technology, where you're looking to maybe collaborating with partners abroad or even locally. You may have the technology, somebody else might have access to market, and the best way to kind of utilize the opportunity could be to kind of do a JV of some sorts, where both parties have a kind of a crack at the opportunity, and we kind of advise and work on that front as well. The management team of Consilium is 3 directors. Guy Rainish, I mentioned earlier on, background in accounting and consultancy. He worked with E&Y. He had his own businesses for a number of years. And then after leaving E&Y, he went and joined Venture Wales, where he was a lead advisor and advised many, many businesses, high growth businesses in Wales. And before joining me in Consilium in 2014. My background in particular is where I started in IT with a company called Logica, but then I moved over to HSBC Bank, worked in retail and regulated markets for a few years, and then spent the latter 5 years looking after Islamic finance for Midlands and Wales divisions for HSBC Bank, and then founded Consilium in 2014. Our third partner and director is a gentleman called Kapil Bali. Kapil Bali also comes from a banking background. He was a corporate banker in India for 20+ years, and he led subsidiary groups of some of the major corporate banks out there, where he would start up a subsidiary, bring it to market, grow it, and then he would be seconded onto another major project with the corporate. And he left the corporate world and became an entrepreneur himself, set up 2 very successful businesses in India before arriving in the UK. And here in the UK, he's also invested into a couple of SME businesses as an entrepreneur and investor before joining us as a director and becoming part of our corporate team. So over the last 7 years or so, we've done a number of fundraising activities and projects in equity for SMEs at both kind of at startup and established companies. We've done a mix of equity and debt, or just pure equity-based transactions. Our typical fundraising begins from the SEIS, which is the £150,000 sort of entry point, right the way through up to £10 million. And that's right across different sectors, which we'll come on to shortly. But we've got a very good knowledge of investors, both locally and internationally. And that's what makes, I believe, our proposition stronger than possibly others. We've got expertise in bringing, again, both private and public funding together. We've got expertise where we can work on some grant monies alongside the private investment space. Accessing capital is a major stumbling block for a lot of entrepreneurs and businesses right across the spectrum. And I think this is, again, another USP for us, that we've got a very diverse network of funders, which will look at startup, which will look at growth, which will look at acquisition, which will look at debt, which will look at combining different elements together. So it's, we're kind of able to help all types of clients that come and approach us, and that's fundraising is a full-time job in itself, and if you've got a willing partner who has got access to different types of funding with different bodies, it can really kind of open up opportunities for you. And we even in the past have been introducers to second tier exchange markets in London, and where we can exit our kind of the clients that we work with. Either they can exit, or the investors that they have worked with, they can potentially exit through these kind of mechanisms, where you can bring either another partner, or by listing on one of the markets, you bring take your existing shareholders out of the equation, or even do a trade sale. Again, some of our corporate finance and venturing kind of partners are looking at more corporate sales, where if there's a good story, they're looking to invest and buy that outfit out and add to their portfolio. And that could be manufacturing, that could be health tech, that could be fintech. There's a whole arena of different sectors that we've got access to through this route. So not only we startup growth, acquisition, all the way through to exit, we can help you right across the funding spectrum. The sectors we specialize in, medtech and healthcare, it's a big growing funding area, and especially in the light of the last 12 months, where we've been hit by the COVID pandemic. More and more resources and money has been made available to invest into this area, and there's a lot of technology-based funds that are also sort of diversifying into more health tech kind of based propositions, both again in the startup scene and in the more established scene, where it's all about remote access, it's all about remote kind of dealing with the current scenario that we have. And then other sectors like cloud tech, mobile tech, fintech, e-commerce. There is an appetite for retail, but in very sort of niche areas within retail, media, manufacturing, and construction. So these are some of the areas, but there's other areas which are, for example, blockchain, which is very high on the radar with certain funds. And when I say blockchain, I don't mean cryptocurrency. I don't mean where you can buy some electronic money and use it in your wallets. It's actually about decentralization of data, and sort of the underlying technology of blockchain. And you can apply that in various fields now. You can apply that in healthcare. You can apply that in in a lot of public entities where you've got huge databases. You can apply that in fintech, where your banks have got huge databases of clients and their data. And it's about how you decentralize huge data, which is normally, in a typical sort of traditional fashion, is held in centralized databases. for blockchain applications, should I say, are also a flavor. AI is another big, huge area where there's a lot of appetite, and funds are looking actively for that unicorn or that new piece of innovation, which makes this piece of technology different than what we've got in the market. And by the way, I can't remember if I mentioned, if there are any questions as we go through the presentation, please just send them through, and I'll try to go through them in order at the end. We should have ample time, at least 15-20 minutes, to go through any Q&As that anybody wants to pose. So feel free to ask questions, but I won't answer them as I go through the presentation. I'll answer them at the end, and I'm sure if there's any follow-on questions, I'll answer them as well. Coming back to the presentation, I mentioned earlier we've got a very wide and an international network of investors when it comes to fundraising, and these are typically your VC funds, both based in the UK and based abroad, and again based in places like the Middle East, in India. Private equity houses, these are mainly UK based, primarily in London, in Midlands, and in Manchester. We've got the tax efficient kind of structured funds who mainly deal with tax assurance based investment schemes like SEIS and EIS, and other VCT type of funds. Family offices based in the UK, USA, China, Middle East, and India, and they all have very particular niches and areas that they like to invest in. Sometimes these family offices say to us that they're actively looking to grow a particular portfolio, or they're looking for certain types of investments. It could be real estate based, or it could be that they've had a trade sale in a particular investment of their own, and it's been a huge success. It's given them a really strong hold in that market, and now they're looking to acquire further assets in that sector, in that niche. We've also got some strategic investors and corporate venturing arms of some of the big entities that are out there that are looking to kind of grow and add value to their existing portfolio of investments. And then you've got your typical venture debt and challenger banks. And we also, as I mentioned earlier, work with foreign investors. These are kind of angels who are looking to come into the UK, and have got anything from £50,000 up to £500,000 to invest in UK-based entities. The tier one investors are looking particularly at the startup scene, and even within the startup scene, they're looking at very early stage ideas where you haven't even gone to market, and they're happy to go and look at the prototype funding and go. So really early stage funding, which is a good kind of fit for a lot of early stage incubation style businesses based here in the UK. The investment process, we like to simplify it as much as possible. When it comes to when we're approaching the investor community, from our end, it's normally kind of a three-stage process. The first stage is, right, let's get you investor ready. Let's look at what you've got, what data you've got, what documentation you've got, how you're structured, who's in your team, understand the client in much more detailed and intimate fashion. And once we feel that we've got all the information we have, we're, we're confident that we know the business in the detail we need to know, that they're structured appropriately, then we go to the market. And then going to the market is basically what you've got there, the 3 bullet points: screening them alongside the client. And in the client, I mean the investor. we may have a hit list of, let's say, or we've identified 15 to 20 potential investors. We talk them through with the client, tell them, what who they are, what they're about, the level of investments they've done in the past, and how they like to marry up. And then from there on is have kind of a breakdown exercise of, we don't approach all 20 at once. We approach possibly two, three at a time. And then the reason behind that is, what we don't want to do is have a scattergun approach where we send out your information to everybody at once, uh, because what we don't want is, the investor community is also very closely well knit. We don't want your information to be the discussion point, when people go for drinks, or just kind of catch up with one another. It's very closely kind of managed process, where we would approach two, three investment houses or investors. We'll go to them, we'll talk to them, we'll engage with them, get their feedback. And it could be that, the feedback could be very constructive, which may help us to approach the next two, three investors. But the screening process is very useful for both the investor and the investee. It's a very good exercise. It's very useful in getting to knowing each other, and potentially bring that marriage together. And if, let's say, the investor likes you, they would like to go further, then the due diligence piece starts. And that's normally two phases. The first phase is normally meeting the client, meeting the investee, having a face-to-face meeting, getting to understand them. And this is where they're getting to know the people behind the business. Do they like them? So they may like what they read on paper, but can they work with these people going forward? And likewise, for the people, the entrepreneurs, the companies seeking the investment, can they work with the investor? I mean, this is going to be a serious marriage where you will be working for, definitely for the next 2-3 years, if not more. And it's going to be where they they come into your business as a third party, and they will have a stake in the business, and they will have a say in how the business is run. So it's very important that you become comfortable with the investor. And once they get to know you, they will then go behind the scenes, do further due diligence about the company, the background. Some is open source, i.e., available through the public domain, and then they probably have other due diligence experts, accounting firms and so forth, who will hold further deep dive due diligence, providing that they come back positive and there's nothing that's alarming. um, we move on to the next phase, which is all about then discussing the investment. So they'll put an offer on the table, an investment term or an offer sheet, and then normally, it takes a week or two for all parties to agree. It could be that they have certain pointers in there which you feel, which might kind of cap your wings a bit, or you may not want that level of involvement, whatever. But that's a chance then for you, as the entity seeking the investment, to kind of scrutinize what's on the table. We will be there to support you. You can talk to you or any other people or parties either that are in your network, to kind of scrutinize the investment, and if you feel it's value for money. This whole process can take anything up to 3 to 6 months. The quickest one we've done is 3 months, but that's where everything has been in place. All all the entities have been on the front foot, and it's gone through really smoothly, with no surprises or no kind of bottlenecks anywhere. But it can take more than 3 months, and that's quite the norm. Before we get to the due diligence, and we normally, when we engage with clients, and this is part of our screening, we say, if you're coming to the investor community to showcase your business, please be prepared. What you don't want to do is go into this exercise half baked and a lot of gaps in your kind of in your back office, in your structure, and as a team. And you may all watch the Dragon's Den. It's good viewing, and whilst it's entertainment, there are a lot of companies out there who just go into these meetings ill prepared or not prepared enough. And we've all seen those episodes where the entrepreneur is asked, what does your sales look like, or what's your profit margin, or what you're going to do with the money, and they become tongue tied. And that's the last thing you want when you're sitting there. You've done all the hard work, you've managed to convince somebody by talking with them over the phone, or by having a conference call, or by showing them your documentation that you've got something that's got a lot of mileage and could be a good return of investment. And there, and what you don't want to do is when you meet them, you fall foul of that kind of by not being prepared. uh, so please prepare yourself appropriately. And these, again, just some housekeeping that we say to everybody. Make sure your business is in a fit state. There's no skeletons in the closet. There's no for example, disciplinary hearings, or you're not being taken to court over something, or there hasn't been a debt that hasn't been paid. There's some serious cases that are being dealt with behind the scenes. That's not a good time to go into a fundraising exercise, because it will scare off investors. And if you, or in the other scenario, there has been cases where something's gone seriously wrong, and it's not ended well. Then please disclose it. Don't hide those skeletons in the closet, because when the investor do their due diligence, these skeletons will pop out. Nobody likes surprises. And so it's better that you guys disclose this from the outset, which moves me on to the next point. Don't hide your past. So if you've had other business ventures, or you've been part of other businesses where either they failed or you've run up into bad debt, whatever, uh, disclose this. Don't hide your past. Um, as a matter of, again, good housekeeping is to make sure your banking commitments are under control, your credit rating is good. This again gives comfort to the investor that you're seen as a responsible entrepreneur, a responsible business leader, who has total control of their affairs. But again, once again, it could be just like what's happened in the last 12 months. We've had a pandemic which has thrown businesses and people, literally in a full 360-degree turn. And so therefore disclose why there's been issues, and there's a rationale, there's a reason, there's a story, and then it can make sense. But if we don't disclose these kind of matters, then more scrutiny comes rather than understanding. As an entrepreneur, as a business owner, as a director, if you've got any other business interests, or any roles, or any other something that you're doing on a part-time basis, please again inform the investor that this is also part of your commitment. The investor wants to, if they're going to put their money on the line, they want you to be fully engaged in that business. But what they don't want is, for example, you to be scattered, or be being torn between 4 or 5 businesses, and you're raising £200,000 to run a project. That won't go down well. Whatever project you're heading to fundraise, please make sure that business is the total focus of your 9 to 5. What they don't want is that to be a portfolio based project, because again, they won't, they want somebody to look after their investment with full focus. Make sure your company structure is clean. So if there's any kind of shareholding, it's cleaned up. There's There is not many shareholders, or any shareholder that wants to kind of leave, have those discussions beforehand. Again, so there's no kind of bad debt or any other elements in the structure which makes it unattractive, or and have it as kind of simple as possible. So if this is the business is the entity and the money is coming into the entity, what you don't want is, for example, and this happens many a times, where it's a tech based business, but the IP sits with the entrepreneur. It doesn't go down well. What the investor wants is the IP to sit in the business, in the company, because they effectively are making their investment into the business based on the IP. Please make sure the management team is on the same page and have the same vision. What we don't want is, you're in the boardroom with the potential investor. You've got two senior members of the team. One is looking east, one is looking west, one is looking at one market, the other one is looking at a different market. Again, it shows disunity, and it'll just, the investor will get up and say, well, you know what, this is not for me. Existing shareholders are on board and they're happy to dilute their shareholding. There's nothing worse where you've done all the hard work, you've got somebody's commitment, and you go to somebody that you who had invested you, let's say, at the early stage of your business. You go to them and say, oh, just in fundraise, I've got £500,000. They don't want to be shocked. And they may not be happy to dilute their shareholding. They may not want this new investor to sit alongside them in the boardroom, and vice versa. The investor may not want this investor. It could be because they're another institutional investor who who is a competitor. So there could be a conflict of interest. So there could be a number of reasons why two stakeholders and shareholders may not want to sit on the boardroom for conflicts of interest and so forth. So please, existing shareholders, make them aware, get them on board, and make them happy, so they are happy to dilute their shareholding. Investors want to see market attraction and pipeline of clients. So when you're there talking about your business, if it's for growth or any other phase in your business, appease them, and get them engaged by saying, we've done so far year to date, and this is what our pipeline looks like. A pipeline of clients, good clients, really excites the investor. How your investment will be spent. Don't say to them, I want, £1 million, and I'm going to spend that on marketing. It doesn't go down well. They want a full breakdown of where your investment is going, how it's being spent, who is spending the money. So I'll give you a classic example. A lot of the time, clients come to us and say, look, we need £500,000, and we're looking to grow the business from let's say a £1 million business to a £5 million business, and which is great. But that means, for us, we ask the question, have you got the resource then to kind of grow the business from a £1 million to a £5 million business? Because when you end up with a £5 million business, it's a totally different business than the business that you were running at £1 million. You'll probably have to grow not just in your sales turnover, but you'll have to have a bigger team. And if you can have a bigger team, how will you recruit for the bigger team? Who will be your recruiter? Will you do this in-house? Are you going to appoint a recruitment company? How much will they charge? All these things. When you're speaking to an investor, say to them, we will be growing our team from 10 people to 20 people, and to help us in that recruitment, to ensure we get the right people, we've appointed a recruitment company A. This is how much they'll charge. This will be the cost of acquiring the new resource, and that's where we're going to use your money to get that gap for us. If it's marketing, if it's social media, if it's a piece of technology you're going to purchase, please inform your investor as much as you can about how you'll spend the money. And also, you've had other investors who came at, let's say, at the founding phase, disclose how much money was spent, how much money was raised. So again, the investor gets comfort knowing that you've been through this journey before and you've managed to appease and kept the existing investors on your side. Meeting investors here again is coming back to knowing your business. People buy into people and not businesses. This is your opportunity to impress the investor, articulate your business and your revenue model, with really knowing your numbers well. If a question is asked off the cuff, you can answer it quickly. Your typical financials, sales, costs, profit margins, whatever, please have them to hand. Have a company valuation that has a rationale which justifies the valuation, and it's not kind of some silly factor times 4 times 5 or times 10 in some cases that you've come to. You have to demonstrate that you've got the capability of executing this investment and scaling the business to the next level, and that's key here. And again, this is coming back to impressing your investor that you are the right person, you have got the skills, you've got the team behind you that can execute their investment and take the business to the next scale. More importantly, get that return on investment that investor is looking for. Team matters. Please make sure that you've got the right team around you. You've got team that's got wearing the right hats. The team members are wearing the right hats. It's not, the founder is the salesman, the accountant, the marketing guy, and the social media expert. Don't wear 4 or 5 hats. Have a team around you, at least 3 to 4 people, so your pressure is shared, your tasks are shared, but also there's now 4 brains and 4 people carrying that business forward. So there's a whole diverse thinking of ideas of how to take things forward. And for the investor, they don't like working or investing into one-man bands. They see that as very high risk. They want to see a credible team with experience with their job. So if I'm the salesman, I've got a history in sales. If I'm the marketeer, I've got a history in marketing. The right people with the right jobs. And if you haven't got that expertise as such, you can still demonstrate that through having part-time directors, having non-exec directors who you still go to. It could be on a monthly basis, it could be on a quarterly basis. But again, it shows as a founder, as a business leader, you've got a team around you to guide you, steer you, and you're there to kind of really have visionary meetings with this team around you. You've got to demonstrate that in your absence, your business can still continue. And this is where the risk is lessened for the investor. And finally, good luck. These are some of the pointers that we look at, we go through when we are helping our clients, run through their journey of raising equity money in the wider world. This brings the presentation to a conclusion. I'm happy for any questions and any other queries that you may have regarding this area. So I'm just going to sort of go here and go to the chat to see if we've had any questions. Okay. First question is, typically, if there is a typical model, what would be a tier 1 investor look for or start a business? Okay, right. Okay. So the question is, what would a tier 1 investor look for when they're looking to invest in a startup at an early stage prototype? What they're looking for in this is they're looking for a technology-enabled business. So firstly, the tier 1 investor is looking for technology-enabled businesses. Any traditional businesses like manufacturing or retail-based probably won't qualify, but this is more to do technology-enabled businesses. Businesses that are innovative, scalable, and viable, and at the thrust of cutting edge technology. It could also be innovation. Could also be in the view of reducing costs, reducing time, reducing effort, reducing human involvement. So that is what they're looking for, uh, and they're looking to tie up, as a foreign investor. They want to come and set up a business, and it could be the UK entity, the startup, which that they use to do that. So they would want a startup and they're happy uh, to kind of to invest into a business which is at a prototype stage, where they would come and they would be a director, and they would probably want a hands-on role in the business, and where they can co-found this with you. So as a co-founder, they'll bring the investment, and as a co-founder, you'll bring technology, and the technology has to be innovative and scalable. Those are two key criteria that they look for, and that would be the first kind of base for them to have a meaningful discussion with you. The next question is, who or what decides the type of investment you go for, i.e. equity, VC, venture? Um, the At the end of the day, this depends on the client seeking the investment. What type of investor do they actually want? Do they want a VC who can be with them for the longevity? Do they want a small private equity house? Do they want a high net worth or business angel? Do they want a family office who may have other portfolio of other clients that they can benefit from? So this goes back down to the person seeking the investment. Actually, what type of investment are they looking for? We don't invest ourselves. We have access to these investor groups, so we bring them to the table, and we will then sort of broker a meeting and a investment between both parties if they're all on the same page. Next question is, how would a company go about finding and approaching impact investors? Uh, Here again, it comes back down to the sector you're in, the technology that you've got. There are, and also the level of investment you're looking for, and the length of period you want your investor to be with you. If you're looking for impact investors, it could be a JV, it could be a new market. It depends on your objective, and because an impact could mean different things to different people. It could be that an impact could be heading into a new market. It could be a new piece of technology for your business. It could be entering a different phase of your development. So it depends on your definition of impact, and then it would be up to us, if from that definition, how many we can find from our pool of investors sitting across the world, both locally and internationally. As a next question is, as a med tech startup in an incubator, what information is required? What if some information is simply not available, i.e. sales revenue? That's fine. If you're a med tech startup and going through incubation, here we're actually more interested in the technology. We're more interested in the development of that technology. If there's any IP, or we're interested in how much value that has, and also the potential. So here we're looking at potential. If you're a startup, we're looking at potential. We're looking at your financial forecasts, what potentially you can, what that investment will bring to the startup. Where will you be in 3 years and 5 years? How much money you need? Do you need money to go into trials? You need to go to, is it just a tech startup that's going to be sitting in a lab, or you need physical trials in clinics and so forth? So the longevity of your kind of, your actual incubation is useful. So, that's the kind of information we would want. But healthcare is a huge area at the moment. Um, it's got a lot of appetite from investment, and everybody is looking at, and from a kind of corporate view, um, a lot of health tech businesses, that's a lot of the big investment funds, that's how they actually, they would want you to go through the whole R&D journey, build up a prototype and seed the market, and then they'll just buy the business, because that's their way of growing and bringing products to the market, rather than going for the whole quagmire of R&D and doing the hard and the grunt work that you guys might be doing in incubation of that 4 or 5 year hard graft. A lot of these big funds and investment funds haven't got that resource. They would rather have something that's already baked, ready to go, invest, and bring into their portfolio. I think we'll give another sort of a minute or so before closing. So if anybody else has got any more questions, feel free to shout out. The presentation, I'll put it back up. You can see our there's a email address available. There's a contact number available. So if you can't think of any questions right now, you can you can email them to me, or you can approach us via the website. That's available. I think we are coming towards the end. So finally, so thank you for your time, and I think it's we'll go from here. Thank you.
Thank you for joining the Emerging Tech Fest. Join us again on our virtual live sessions, or watch us on playback anytime, anywhere.